Hi and welcome to this live currency strength indicator table video with me, John, on this Thursday the 2nd of March. Here we have our two tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are the same studies but just highlighting different time frames. You can see here some of the currencies are highlighted in green. That means there is a confluence between those trading time frames, and that's where we're focusing most of our attention in these videos. Tables auto update every 5 minutes 24/7, meaning our members can see how the markets stand right now in real time. So we can see from the trend traders that the US dollar tops the chart, or the table, sorry, at S1. It only appears as S3 on our day traders, so maybe a little bit of the momentum fading slightly there for the US dollar. We've got the euro at S2, which is also S2 on our day traders. We can see that the Japanese yen tops the trend traders as the weakest currency, but appears as the second weakest on the day traders. The Australian dollar is the second weakest on our trend traders, but is the third weakest on the day traders. And the Swiss franc is the third weakest from a trend trader's point of view, but from a day trader's point of view, it is the weakest currency, meaning that there is some momentum with that market. You can also see Kiwi still at S1 on our day traders table. If I flick back into yesterday, you can see that Kiwi was on our day traders table yesterday. And I quite like the idea of Kiwi remaining sort of fairly strong at the moment, especially as I've been looking around the charts this morning and I can see Kiwi yen has broken through a range high. I'm also going to discuss Aussie US dollar in this video as well. Still looking for a bit of a pullback to happen on Aussie US dollar, so I'm going to point that one out. And yeah, let's go take a look at the charts then. So I'm going to kick it off with Kiwi yen. Kiwi yen's obviously interesting because we're trading within this weekly range. Price has been in this range for some time now, and we're kind of trading between the 87 handle and the 80.75 handle. And price is kind of flirting with the sort of middle of the range at the moment. We're kind of just popping above it at the moment, which makes me think that because we've tested the sort of lows of the range, we could be heading back to the top of the range around about that 87 area through there, that sort of zone. So looking for potential opportunities long, especially because if I go down into the daily time frame, you can see that within the overall range we've had another trading range which is between 84.75 and the 81.50, and price yesterday rallied above and closed above the range highs. So that to me is a strong suggestion that we are going to start seeing price break to the upside. You can see here that the 200 moving average running through as well sits below this area. So really speaking, if we did get some kind of pullback, it could be ideal to start looking for some long entries on Kiwi yen. Now if I go down to the 4-hour time frame, you can see in a little bit more detail how price has exploded through those highs, and there's a couple of areas of interest. I quite like obviously the 84.75, that's a big level. You can see that 84.72, the 200 moving average, is through there, but you can also see 84.50, which is this line through here, which again you can see a consolidation and then price breaks out. So I've actually got a little bit of a zone on the go. I've actually moved this yellow zone down into around this area. Let me just bring it across actually, just so we're focusing on the area here in question. So you can see here really the zone between the 84.75 and the 84.50 handle. We've got a 25 pip zone here that I think we could work with for opportunities to the upside. Now what you're going to be looking for is if price does come back into this area, you're going to be looking for bullish patterns. And what I mean by that is you're going to be looking for your double bottom pattern, which is basically an equal low to the previous low, where you can look for opportunities higher. It's very similar to sort of this here, where you can see price rallies, comes back in. Although the wick trades below that low, the body of the candle is above this previous low, and then price reverses. Alternatively, you're going to be looking for something called the head and shoulders pattern. So when you have a support point, price will then form a left shoulder, head, and a right shoulder. So you have the left shoulder here, the head is a lower low, the right shoulder then will usually find support around about the left shoulder. Okay, so that'll be your opportunity to take price to the upside. So that's what I'm going to be looking for in and around this zone. I like the idea of 84.50 being the deeper part, because you can see this previous consolidation in there as well. So that zone there is quite important, I think. And what you can see looking left as well is, look at the extension to the downside. You know, there's a big old sort of gap between this area in here that I think price could want to fill. So if it is going to fill that area, you've got a 250 pip target. Now you could be looking for limit orders here. You can have a 100 pip stop here if you want to be super sort of conservative. I would wait for price action, just because you might be able to get a tighter stop. And if you've got like a 50 pip stop loss with a 250 pip target, the reward to risk ratio on that is really good. So that's what we want to be looking for when we look for those high reward to low risk trades. Okay, so that's what we're going to be looking and focusing on Kiwi yen. I did say I was going to talk about Aussie US dollar as well. So if I do go over to Aussie US dollar, still looking for a position into this market. We did pop back up a little bit higher, but we didn't quite reach the area of interest which we spoke about in the video, which was the 0.68 handle. Price did try and make it an attempt for that level, but if I zoom in, you can see we actually just came back into these lows over here that formed on the 23rd of February, and we rejected that and price moved to the downside. Now you can see we've got this kind of bearish flag pattern going on. Now a bearish flag pattern is when price moves quite aggressively in one direction, and then we only get a very shallow sort of, or a sort of long-winded pullback in a way, where price is just making sort of higher lows and higher highs, but we're not really making any kind of aggressive moves back to the upside. And typically with these type of patterns, price will exit the way that they came into the pattern. Okay, so I'm looking for an extension to the downside. 0.6650 is still my targets here. Now, because we're in this pattern, you know, if price was, let's just say, carry on up to the upside, I'd love to see a false breakout here of a 6800 level, because you've got the daily 200 moving average running through there as well as it being that resistance zone we pointed out before. Now a false breakout could also be like a double top pattern, where you can see here, if I highlight the top here and just draw that a little bit better for you, you can see that price came back into these highs here, but instead of closing above and continuing to the upside, we rejected, and that's what you'd call a false breakout pattern. Whereas if I look left at this one, that is not a false break, because price has continued to trade to the upside. Okay, so the false breakout pattern there could work down at the 0.68 handle, as price works within this kind of bearish flag pattern. And I'd love to look for entries around about 0.68. You can have your stop at 50 pips, target at 150 pips, nice 3-to-1 reward to risk ratio there. So those are the two that are in focus for me at the moment. Obviously Kiwi yen we haven't spoke about in a while, and I just want to notify you that price is trading outside of that range, and we could have room to sort of go up to the 87 handle. So definitely one to watch for me going forward. Hopefully you enjoyed the video, and I look forward to speaking to you in the next one.